a history of almost 30 years of doing transaction. I've been blessed to do a lot of them and find ways, different ways to be a blessing to people. I believe this is my calling to see people become homeowners or multiple homeowners. All right, so let me bring my PowerPoint, and I have some coach here. It looks like one of my co-people, Fernando. I see you there.
How you doing, Gary?
All right, you're driving, so that's cool.
Yeah, and conditions are awful out here,
Okay, no
but
problem.
we'll get through it.
Okay, that's awesome. So Fernando, can you put a slide back on? Because I'll put my slide. I'm trying to figure my scanner. All right. So do we also have Angela on the line? Not yet? Okay, that's cool. So Fernando is with CMG Homes. I've done a lot of loans, actually over 25 years in the loan industry. So, and I'm excited about some stuff he's going to share with us today. And if we get Angela from East West Bank to also come and share what they do to help buyers become homeowners. All right, so let's take that off. Let me put my slide on. All right. So we're going to talk about this market. We're in a unique market, right? A lot of people are saying stuff about, oh, can you buy in this market? Can you own? And first of all, I wanted to make sure everybody understand real estate is a long game, right? You're going to be in it, I think average homeowners right now, they stay in their house for about 11 years. And that's very reflective of me because in the last 30 years, I've changed homes about about four different times, so, and they're all homes at home. Okay, so let's go into that. I already talked about myself, again, glad to be here. And my guest speakers, Fernando, just say hello to everybody.
Hi, everybody. How are you? I'm Fernando Diaz with CMG Home Loans. And kind of like Gary said, this is my 30th year in the business. It's the only thing I've done since the day I graduated college. And I agree with Gary. It's been a great blessing to be in this business because it's brought a lot to me, obviously, for the last 3 decades.
Thank you. And with Miss Angela, they just have a unique program. If she's here to talk about it, if not, I'll talk about it on her behalf. She did promise she was going to be here, but we'll see. Okay. So buying into this market, I really want you not to believe the lie that people are talking about. The truth is, in any given market, there's always an opportunity to buy. And we know by how the market is, because some properties, we made an offer on a property for a client, and the agent told me they got 10 offers on the property. So there are people that see value in getting into their own place. And I just believe right now, if you get into it, there's going to be some craziness that's going to come up. I'm not a big believer in politics and stuff, but I still think the government, they kind of maneuver things around for us when they want us to be active and when they want us to cease from being so active. That's inflation stuff, right? But if you get yours now and the market goes, the rates get better, guess what? You're going to save money, so we're going to talk about that we don't want to believe the lie. Do you see any line, Fernando, that is going on right now that people need to be aware of?
Well, I mean, obviously, the market has changed from where it was before, but I agree with a lot you're saying, especially earlier when you said if you're playing the long game, you really cannot go wrong with real estate. For example, those 4 homes that you've switched or have bought, and moved, Gary, what if you would have owned them all still? I mean, we always have those stories, right? I should have kept everything, right? But that's the long game. See, if if you invest in real estate for yourself, it's going to carry you, especially in your retirement years, so much further than if you're renting and you don't own real estate. I mean, that's just, you can run the numbers. That's just facts.
All right. Okay. So I'm gonna invite you guys because I understand everything is in the mindset. What we do in life is in our mind, and there are certain ways we behave based on information we have been given. It could be from our parents, it could be from our society, it could be from people we know and trust. And in order for anything to change, that mindset have to change, because we're going to talk a lot about things, that is possible, but we just don't think it is, right? So the programming of our mind is set up by what we know, what we do, and then we will feel like that. And when we feel like that, we act towards things like that, and we get the same result. So today I'm asking that we just open up our mind for a minute, let this new information come to you. And I believe if you receive this information and you feel it in your heart, our heart is where we do a lot of stuff, right? Once we feel good about something, then we take action on it. And once we take action on it, we're gonna get new result. And that's what we're gonna talk about today. What kind of new result can we have in terms of building wealth through home ownership? Okay, so let's move over from that slide. So again, knowledge is power, and that's what we want to arm you with today, give you knowledge in terms of what happens in the real estate world. Uh, you know, Either you're a first-time homeowner, we're gonna be talking mostly with first-time homeowners, but we're also gonna talk about people that wanna own their second home, what you can do, because that's how you build continuous wealth. All right, that's the new programming and new result. Awesome. All right, so let's talk about the 7 lies of ownership. The lies that people talk about when you're owning a home. Right. So they say you can buy in this market. Uh, you know, Fernando, can you just talk about, you do loans. Do you have
Hmm.
people buying in today's market or not?
I didn't hear that last question, Gary, because I can't see your slide. What was
I
that?
say, I say you do loans. So if people say you can buy in this market, can you make comment about how much applications you're getting into this market?
Well, that is actually a great question. So one of the things that we've noticed in the first quarter of this year is interest, people looking at, hey, like Gary said, the mindset of, hey, I just need to buy. Okay. I'm over the fact that rates are no longer 2 and 3%, but I continue to rent and my rent continues to go up. I need to start something for myself and my family. So we definitely would say that the interest in the application level is pretty high. I mean, considerably high the first quarter of this year, because like you said, people are starting to say, hey, let me where I'm at, let me see what it's going to take. Maybe I can't buy today or next month. The plan will get me there, let's say in the next 3, 6, or 12 months, whatever it is. So I like that because people are interested in their options and what it is that they have to do to get there.
All right. Another lie that people talk about is I need to wait for the next market. So, of course, we all like to have, Dr. Doolittle, glasses and see into the future of what's going to happen, right? But we don't know that. So what is that next market? I remember prior to when COVID was starting, people were like, no, with COVID coming up, let COVID settle on people, and homes will be going to be thrown for $1. I'm going to buy 10 homes at that time. And I remember telling people, look, you've got to take the advantage you have for you now. Don't wait, and see what that's going to look like. And sure enough, a lot of people that waited, they're biting their tongue now because, instead of homes being thrown away to them, it actually become very competitive, right? So you can't say you want to
I
wait
I
for,
agree with you. I have clients that Can you hear me, Gary?
yeah,
So I have clients that have done exactly what you said. They were looking 2, 3, 4 years ago. The rates were in the twos and threes. The prices in the areas that we're looking at might have been 8 or 900, and today the rates are 6 or 7, and the houses are 1.3, 1.4 in the areas they're looking at, and they still haven't bought. So once again, about that perfect market, there is no perfect market for the long run. It's just about you being ready to jump in and go forward, because otherwise things like that can happen. As you can see with some of these clients that have waited, their situation potentially is getting worse depending on what they're looking at.
Okay. There are no great deals to be had. Again, the deal to be have is what you have before you. And what you're looking for is going to be determined by the kind of financing that you are going to get. If you have a lot of money, there are different options for you, obviously. If you don't have a lot of money, you can still get what is available for you. And I really believe what's available for you is still the best thing for you. Uh, you know, uh, that's just the truth. Now, there are things times, a property comes up that's been in the market for a while that you can, even some really great properties. I know I had a great listing that took forever to put in escrow, and I just can't wondering like what's going on with that. Uh, and the person that got it ended up getting it for a pretty good discount, right? So there's always deals to be had at your level. It's what I would say about that. Okay, let's kind of keep moving on. And then I can afford to buy. Okay, so Fernando and we're gonna talk about some programs. I just want to employ you guys to wait for a minute. We're gonna talk about some programs that what is affordability? There are programs, you just gotta have knowledge of what's available, what programs are available for you. You can't afford now, of course, you gotta have a paycheck, okay? And in today's world, you need to have a pretty good paycheck, right? But once you have that, some of the things that end up people really the next thing on the slide, I don't have enough savings, I don't have enough credit, that kind of stuff. It's but once you have your mindset that you want to get something, I believe the world is going to open, the universe is going to open, God is going to open things for you that's going to come your way to aid you to achieving your goal. And the last thing is just to kind of wind down on this, I don't want the commitment of home purchase. Now, let me get another perspective on that. Commitment of home purchase. Fernando, do you have any comments on that before we go to the next slide?
Well, I think that in buying a home, commitment is everything. Like you said earlier, I think you need to be committed to it, but you also need to understand the benefits of it and the long-term picture, like we talked about. I always do the example of two teachers. Obviously, everybody knows teachers don't make necessarily the best living, but they do have some good retirement benefits, which is great. But you take two teachers that go 30 years, one rents and one owns. Who do you think is going to be in a better position when they retire? I mean, it's the no-brainer. So that's the commitment you need to make to yourself, is looking at the long-term picture for yourself and your future, because a lot of us make that mistake. We live in today, but we don't think about tomorrow and going down the road and what does that look like when I can't work or when I'm too old to work, or et cetera, et cetera. So those are my thoughts on that.
Yeah, and it's funny you said that. I remember I came across one lady a few years back, and she's been renting for 27 years, she told me,
Yeah.
at the same place. So I'm like, in 27 years of renting, if you had owned a home, 27 years ago, homes are going for 100,000, maybe even 30,000, right? Because I know a couple that bought a house in PV 35 years ago for like 35,000, right? So 27 years ago, that 35,000 is anywhere but PV, right? And in 27 years of just renting, imagine what that
I realize what these are. Does anyone recognize these?
what that home could look like. We're talking, 800,000, $900,000 of wealth in the LA County area. So,
Yeah, 70% of Americans, their greatest amount of wealth is in their home.
yeah. All right, let's move on. Okay, so we want to talk about getting offers accepted. I don't know. This is okay. Let me move through this slide. It's not the one out. All right, getting qualified. It's very important that you get qualified. Obviously, in order for you to do a loan, and we're gonna talk about the different programs that can help you. This is where we're gonna do a lot of talking today, for you guys to just get understanding about the possibilities that's out there. So let's talk about the program. Do we have the slide for that?
I can hear.
I think I don't
It's
have.
at the end of the slide, Gary.
Okay. Okay. All right. Is Angela on the line, by the way? Because I don't know who's on the line.
No, she's not yet in.
Okay. All right. Okay. All right. So let's
saw
start
your
with
text.
I'm sure everybody's been hearing about this program, the California Dream for All.
All right, cool, bye.
What does that do for you? So what we're going to share with you right now are the different lending programs that one can get into that allow you to finance real estate. Okay. Fernando is going to talk about a couple of them, and I will interject on the rest, because I have another lender that's supposed to be on that's not on yet. So the California Dream for All, well, it shows right there, it's a dream for all of us to get into. Because in owning a home, which is why I was talking about the mindset, in owning a home, it starts with a dream, or vision of what you want to be. I want to own this kind of home. I want to get my second investment home. It starts with that dream. So, and now the state of California is making that feasible for us. The state see value that if it's citizens, homeowners, that state is going to be striving, right? Obviously there'll be more taxes with this being paid to the state and all that stuff, right? So that's that's the world. But let's talk about the California Dream for All. What does it do? What does the program entails?
You asking me?
Yes, sir.
Oh, well, you didn't say it. So everybody, okay, this is a great program, guys. So the California Dream for All program, the state gives you 20% down towards the purchase of your home, and which is a tremendous advantage because obviously that's a huge down payment for most of us. So that you could use it for the purposes of buying a home. There are a couple little caveats to it. Obviously, you have to be a first-time buyer, and they do have something that we need to be aware of. They have also a little piece in there that says that you also have to be at least one of the borrowers has to be a first generation buyer. So if your parents own a home, and that means you're not a first time generation buyer because your parents own a home. But we have to be a little conscious of that. But if the other person doesn't, then you're fine. But it is a terrific program. The portal opens April 3rd, which is coming up, for you to upload your approval letter, and a few documents that they ask you for. And it closes on the 29th. It is going to be a lottery system. So once your application is there with them and the information that you need to provide them is there, you will be obviously given some sort of, I assume, a number. And then we'll see if you get picked as when they do the lottery draw going forward to obtain that program. But yeah, very good program for people, with a high down, that need the high down payment. It was very successful the first time. Remember, Gary, it ran out of money like in 13 days.
Yep.
It was gone. Yep.
So let me ask on behalf of the audience here, why do I want to use this program? Why do I want to use it? It's because you mentioned about the fact that they give you 20% down payment, right? Well, let's talk about what that 20% down payment does for you. in a regular loan, where you talk about it, in a regular loan, if you put in 3.5% down, that kind of
Yeah,
stuff.
you're gonna have mortgage insurance in most of the scenarios for first-time buyers, but because they give you so much money here, that's one expense or one cost piece that you don't have. So mortgage insurance, you can get rid of it by using, the 20% towards your down payment.
And what is the income limit to qualify for this?
It's 155,000 for whether it's a single person or married couple, whatever it may be.
So you cannot make, so long as you make less than 155,000 and your first time home buyer, is it still in the concept of first time home buyer after 3 years of not owning a home?
For this program, they want 7 years.
7 years of not owning a home.
For this program, but for the standard program, Gary, that's 3.
Okay. So of course, every great program have their we're gonna give you the pros and cons on it, right? So the pros is that you get a down payment, the assistance. Basically, if you qualify for, let's say, a $700,000 property or $800,000 property, now you get $160,000, which can give you a qualifying up to $960,000 property. Obviously, that's going to be more property than you normally will have. Or it allows you to pay less on the $800,000 you qualify for, because now you're putting 20% down, right? But let's talk about the cons on it. What are the stipulations around that? So are they giving me the 20% for free and I got it going on, or I gotta pay it back somehow?
There's always a catch. Yeah. So no, you will obviously pay back your 20% in the future if you sell the property. But I think the biggest thing here that people have a question about is the equity share piece that the program has. So basically, depending on your income level and the formula that the state will run, you will equity share with them anywhere between 15 to 20% of any profit you make if you sell the property in the future. So if hypothetically after sales costs and all that, if you are netting or making $100,000 on the sale of the home as a profit, you may have to give the state back anywhere between $15,000 to $20,000.
Okay. So, and if you're making $200,000, basically the same thing.
Same thing, yeah. Across the board.
All right. So that's for people to know. And what is the FACO score that's needed for this program?
660.
Oh, 660. Okay. I thought it was more than that. Okay. That's cool.
Yep.
So that's one program for people that wants to get in, have a lower payment. You can use that program. Let's go to the next, because we got 5 different programs to talk about here. Okay. So Cal FHA is another one that's also by the state of California, but I don't believe the stipulations on this is as rigid, and it's not.
No.
This is for everybody, right? Well, not for everybody, but not for
Well, it's
everybody.
not for everybody. You have to be a first-time buyer, but that's defined by anybody that has not owned in 3 years in this program.
And what does this one? What's the difference? What do we get from the state?
Higher income limits in LA County, it's 194,000. Okay. So there's more bandwidth. Other thing too is they do the FHA and the conventional program, so they'll give you 3.5% on the FHA side or 3% on the conventional side. They and actually, I will say that especially for the FHA side, the interest rates that they offer are very competitive and in some cases below market. So they do, have some good potential perks. There is no equity share, so therefore you just give back the money you borrowed, which is 3% or 3.5%, and the rest of it is all yours. It's your profit. So that's another big plus there too.
All right. So this is just to get the difference from the California Dream. Your maximum income is 150,000. You go to Cal FHA, where you're not sharing equity, your income limit is 192,000. So that that's feasible for 2 people buying a property together. 190,000 is pretty feasible. So that's another plus. So when you're saying, oh, I don't want to buy because I don't have money, guess what? That's a lie. You can buy with not having that much money. Yeah,
I mean, and I've had clients just as in the last 3 to 6 months that have gotten the Cal HFA program. Plus, and Gary can talk about this later, a seller credit to help them with their closing costs. And they basically got into a home for about $1,500. But that was their piece of it. The rest of it was covered either by the state with a down payment or by the seller's contribution to help them with their closing costs.
Yeah. Okay. So that is definitely available. Again, you know, people say, oh, okay, if I'm buying, the interest rate is high today. That's just for today. The market goes up and down. It will come down eventually. And when it comes down, I mean, I know for people, for those of us that have owned homes for a while, we've done refinancing. You know, I don't do too much refinancing, but I've done it 1 or 2 times myself, where a mortgage I had that was 6%, I reduced it to 3 or 3.5% at one point. And still the same property. And of course, I reduced my years on it, so I can pay them off sooner than later. So you're gonna have those options. And when you're renting, you don't have those options. You know, this is how wealth is built for you and your family. It's very important to see that. All right, so we're gonna move on to talking about some other programs, okay? We have some sensor track program. Actually, you did a little bit of that, you know, for a client of ours, Fernando.
Yeah, Dixon.
So if a property purchased in a particular sensor track, the
Yeah, so
benefit.
there's a couple of programs out there that we have, depending on the address of the property, which we have to plug in. It opens up these community lending programs. And so basically what the banks have done in those cases is they're discounting the rates heavily to, you know, help people obtain homes. So for example, if the rate would normally be 6.75, let's just say for a regular transaction for this particular client, it might be 6.25, or 0.5% better in rates with one of these programs, which is what Mr. Dixon over there, we were able to do for him.
Awesome, awesome. So if you buy in, what is a census tract? It's I don't know how they put it together, but
It's like a median income calculation, you know, that they get through census information.
yes.
So
So
that's
in
basically
different
what it is.
neighborhoods, by the way, it goes all the way to PV, you know, but it will always be in the lower end area of that particular community or city. But you know, and sometimes the census tract is, you know, you have a community where you have a lot of old people that bought homes there for a long time and they don't sell, and now they're all on their social security income. So their income will reflect a lower income area. And if you pick up an address in that area, now you have savings, quite a bit of savings. And it doesn't matter what your income is in this area. If you buy in this area, you will get the savings. You know, so this is just giving you guys an idea of what's possible. I also want to talk about the community program. I had another lady that was supposed to be here to talk about that. She's not. However, let me just, you know, talk about that. So what that just offer, it just opened another avenue. Most lending programs use 2-year income average. Okay, this is getting you guys really educated. Most lending programs use 2-year income average. This community program allows for just 1-year income average. Because I've had people where, okay, maybe 2 years ago, they were just going to school and working part-time, and so they only make so much money. And then a year later, they got a job and they are making the money they're supposed to be making, right? And then you make that money for a full year and you feel good that, okay, I make good money now, I want to buy. But most time you go to a lending program, they want to look at your 2-year average. It's always a fight to get them to allow that new income you have, unless it's a new salary. If it's a new salary, they will allow that. So this community program will allow for that 1 year, and that just allow you to qualify for more property. There are some other perks, you know, but since the lender is not here, we ain't gonna talk about
No, you
that.
make a good point there, Gary, on that. So for example, we have a client right now that was going to school and was doing Uber or Lyft part-time, going to law school. And for 2 months ago with a law firm, making, 120, 140,000 salary a year. So the Uber income is now no longer, which was not a lot. We can immediately use this new income because it's a salaried position for them, and they obviously went to school for it. And
Yeah. So that is another way to get finance and own your property. Now, most of this program, they do want you to be a 660 FICO score or above. Of course, the higher your FICO score is, the better. And then, so we're going to talk about LIPA. LIPA financing is through the through the city of Los Angeles. If you're a first-time buyer looking to buy in LA City, LA City is it's pretty vast. San Fernando Valley, all of that is LA City. Of course, the Southwest LA, in the South Bay area, Harbor City and San Pedro is under LA City. So with that program, the city can pay up to $160,000 for you in down payment and down payment assistance. But unlike the California Dream for All, it's not a lotto, but you just get access to it right away. They've gotten their restrictions a lot less now. Before, they used to consider the whole household income. Now they just use the candidate income, which allow people to qualify. It is on a lower income bracket. Like if you're one person, you can make more than $67,000 to get it. If you're two, it goes up in tiers. So you let us know how many people in your household. I think if you're up to 7 people, then your income can be as high as 140,000 to get that assistance. But whatever it is, if all we need to do is get with you, there is always going to be something available that you can take advantage of. Okay. And I don't want to go without talking about NACA, because a lot of people come to me, how about NACA? How about NACA? NACA. NACA is a great program. Okay. NACA is really good for people that have a high rental. If you are paying high rent, you're renting a place for 4,500 or 5,500. Great. You can go into NACA, and because they're going to look at your 6-month bank statements. And depending on what your income qualify you for, let's say you make good income and for the last 2 years, but you've been renting you've been paying low rent. A lot of people rent with their parents or they rent a room. Those are tough to qualify for with NACA. They have to see 6 months of you meeting the mortgage line that you're gonna buy. So what I find out is if you have a good rent or you want to buy income property, then NACA may be good for you because they will allow the incomes of the other units to qualify you, plus what you are currently paying on rent to qualify you to buy. So you can give us a call and we can talk about that and see if you're a candidate for it. Most people go into NACA and they don't qualify, or they take a 6 months, they have to give you 6 months, 6 months, 6 months. You can be waiting a year. By the time you're waiting a year, the market has already gone up 100,000. So you have to be careful about that. If you qualify for it right away, yes, we can talk about jumping into that. So let's just, does anybody have questions for us regarding all these programs we share with you?
I will say one more thing, Gary, that also be aware of your local cities, because sometimes they have special programs that they offer too. It's not something that's typically publicized so much, but sometimes, the city of Inglewood, the city of Gardena, Hawthorne, whatever, they may have some money aside for first-time buyers too within their city districts. That's also available there too.
So the thing to know is every program have its share of guideline, right? You have the nursing program, they have the share of guideline. So the key thing is for us to connect with you and see what program that you're thinking of, or identify all the programs with you and see which one that's going to work for you. But it's available out there. If you desire to own this home, and by the way, this is not just for first-time buyers. There are some of these programs that's available for second-time buyer. Of course, we have the standard FHA conventional that we didn't talk about today. I just want to make sure, one, we shift our mindset that something is possible into this world. Two, there are buyers seeking for homes to increase their wealth all over the place. So why not you? And why not your family? So it may not be directly you, maybe you own a home already, and you want to get somebody else a place. It you know, it's possible for them. So I want you guys, Wendy, can you put our slide back up? So if people have questions, they can call. Obviously, y'all got a lot through whatever medium that you came on today. So I want to throw audience participation. I want some Q&A. Please, anybody got questions that they wanted to ask for of us?
Come on, you can't win a prize without a good question. Gonna be deleted.
So to win the prize,
Question.
to win the prize, just so you guys know, by just being on, we're putting your name down in the, and we're writing your name down in a box, and we're gonna check the box at the end, and you get to win the prize. But let's do it this way. If you ask question, we're gonna Wendy, for those people that ask question, let's put their name down twice. Okay, all right. Everybody raise their hand up. Okay, we got our hand raised. Who's that? Let's see. Oh, Madam Lara. Okay. Any questions, ma'am?
Yes, good morning. Very great presentation. Thank you. But this is only focused on single residence type of housing. Are there special programs for commercial in terms of affordable housing? Do you have any information, or
For commercials, they are just SBA loans. That would have to be on a per apartment basis. There's SBA loans, and there are different guidelines around that. But that's obviously not for everybody. But if you have questions on those, we can definitely we can set up an appointment to talk about it.
Okay, sure.
All right.
Thank you.
Thank you. Anybody else have questions? Thank you for putting up the different programs for them to see. Come on, people. I mean, we got 21 people online.
Yes, I have a question.
Okay. Ms. Paula?
Yes, you said NACA is the one that allows you to purchase maybe a duplex or a triplex, and you could use the income, the potential income from the other two units in order to help you qualify? Is that what you said?
Yes. Well, that's not just NACA alone, but let me talk about the NACA specifically. NACA allows you to buy with zero down. Okay. They allow you to buy with zero down. And so let's say you're buying $1 million 4-unit, right? And normally $1 million is about $8,000 mortgage payment. And you would have need at least a $16,000 income to qualify for that. So let's say your income is $8,000 and you're currently renting a place where you're paying $3,000 a month. Okay, follow my pattern here. So you're already renting $3,000 a month. You've been renting there for 3 years or whatever, right? And you want to buy this $8,000 project. So your $3,000 rental, and if the 3 other rentals are equals to $8,000, you can qualify through their program.
Okay.
Okay.
Mhm.
That's the way, and you're going into it with zero down. Out of
And also,
pocket.
Gary, we have a program that has no income limit for a single family or 2 units FHA that you can use as a zero down option. So that's another one that we could potentially, if you're looking for a duplex, they will provide a second that you have a payment on, a small payment, but it is 100% financing, and FHA does allow it. And you could use it for 2 units if needed.
Okay,
Okay,
that's good.
thank you.
All right. Anybody else have question? We got 2 people that's gonna have 2 submissions for the raffle. Anybody else?
Yes, Gary, just a quick one for the NACA. Is there no income qualification for that?
No, there's gotta be anything you buy, there's gotta be income. It's definitely income. It's more straight income, what we call documentable income.
Right.
You know, your W-2 income, that kind of stuff. Yeah, there's no, they don't do, you know, bank statement program, that kind of stuff. No. Can you apply
Yeah.
for? I see a question. Can you
Oh yeah,
apply
we had
for?
another question.
Okay. All right. We got somebody. Okay.
Hello, quick one. If you are having a house and you are looking at it, maybe you should flip it up and get a new one. Is it possible for you to like convert the existing one to commercial one and get a new one?
Okay. If I think what I'm
Yes.
hearing you say, well, let's make sure I get the
Like
understanding.
suppose I have an existing home, then I'm planning to like get a new one. Can I convert this one to a commercial one without selling it?
What is commercial to you? You mean like?
Like rental?
Yeah, of course, of course. You can depart. You know, that's what people do to buy the second house. You know, you move from what you have and you rent it out. And depending on the rent from the actual mortgage, we'll look at if it makes sense. If you're renting, let's say you have a departing home and you have $3,000 mortgage payment, and you can rent it for 3,500. Great, that kind of even you out because they always give you about, right, Fernando? What's the percentage you give them?
75% they'll give you
75?
of the rental, yeah, proposed rental income.
Okay, so let's say you're renting it for 3,600 and your mortgage is 3,000. That evens you out. So that now allows you to go buy a new property that you want. Now, if on the other hand, let's say you're renting, you have a $5,000 mortgage and you're renting it for 3,500, there's a negative there, right? So
Yeah.
that negative is taken into account towards your qualifying for that new property. So you obviously got to make a lot more income to qualify for that second property. But yeah, it's quite possible. It's all about the numbers. And we can sit down with you to talk about that anytime.
Okay.
Any other questions? I love it. Okay. wait a-
Yeah, thank you very much for all you do. First of all, I like this. I just want to ask a question. Is it possible to like combine 2 housing opportunities like FHA and NACA? Can you combine 2? Or you just have to choose one program?
Yeah, you have to go with one. They don't work like that. But do you mean if you meant that? Can you look into several of them that's gonna work for you? Absolutely, right? But you're eventually gonna go into one. You just have to, you know, when you want to get a good understanding of how the guidelines of the program works, which is gonna work best for you, then you go all in for that.
Thank you very much.
You're welcome.
Good question.
All right.
I have a question.
Okay.
You didn't mention anything about VA. Do you help out with the VAs?
Yes.
Of course. Fernando, talk about that.
The best loan out there is VA for sure. So as you guys know, you can go in with as little as zero down on a VA program. There is no mortgage insurance at all that they charge. They do have a funding fee, which is financed in to the loan. But if you're on any type of disability, we'll obviously look into the VA portal for ourselves to see. That fee is waived, also the funding fee. But it's a phenomenal program. If you're a veteran, I highly advise you to consider using it to buy a home. It's one of the best loans out there.
I did get a call from a lady about VA yesterday. So let me put that question to you, Fernando. So our son it qualifies for VA, and
Okay.
she wants to know, can she and her son buy together to use
No.
both income to qualify?
They cannot. That's one of the VA's quirks. So only a spouse can be with you on the loan. So if your mother or your father wants to co-sign with you, they don't do that. That's not acceptable.
Okay.
So only your spouse or another veteran, I guess. If you have two guys, two buddies that want to do it together that are both veterans, that would be allowed too, I guess.
So
How about a
That brings
second
me-
home? We
I
already
didn't
have
hear that.
the one VA. Can you use the VA loan for another one?
Yeah.
no.
So if two spouses, yeah. So if you use your VA already and your husband hasn't, then you can use his VA for the next purchase. Yeah. And both of you can be on the loan. Yeah.
So no, let's make sure we answer that right. I think what she's saying is we have a home that's VA already and want to buy another VA, but it's only one VA person in the
Yes.
family. All right.
Oh, only one. Yeah. Then we have to check your eligibility. So we need your DD 214 certificate of eligibility. We'll go into the VA portal and see how much and we'll have to see how much that gives you. There you go.
I'm assuming if you've been in
So,
your
so
home,
the answer is not no. It's maybe. We just need to see.
Maybe
And
you
that
can
brings
use
me
the
to
VA loan twice.
Yep.
Okay, so
And yeah, sorry, I'm interjecting. And that brings me to my next question. For programs that offer zero down payment, does it mean that like your monthly mortgage is gonna increase, or it would have been the same if they use the offer?
Use the offer.
I'm trying to see how it benefits. Like if I'm, getting zero down, payment, will my monthly mortgage increase? Or if I didn't take that offer, I put down my regular down payment, would it have been better for my monthly mortgage?
Well, I think I can answer that. So I've got clients that sometimes truly do not need the first time buyer programs, but they do qualify for it because they have plenty of down payment funds to work with. And so sometimes what ends up happening is they say, okay, let's look at a CalHAPA model where the state's going to give you 3 or 3.5%. And let's look at the payment and how it looks for you there. Okay, so we take a look at that. But then we say, hey, if you were to put 10 or 15% down and do a conventional loan, and we were to get rid of the mortgage insurance for you and all these things that we can do potentially, here's your payment now. And a lot of times it may be significantly better. So then they say, yeah, let's forget this first time buyer program. I'm just going to go with, 15% down and let's go this way. Okay, fine. But that's case by case. And obviously these are people that, you have significant down payment where it can make a difference for you on your payment.
so if
All right, thank you very much.
if I just want to interject with that, I really think it's always comparing apple to apples, right? There are times when the assistance program actually make more sense for you, and saves you money, and you're not paying more. Like you said, at one time, Cal Alpha FHA is actually very competitive. So if you're doing regular FHA and Cal Alpha FHA is better, hell, you can take the money and go with it. But
And you can also put money on top of it. If they give you 3.5% and you have another 10, you could do that if you like to get your payment down further. That's up to you.
Yeah. Okay. So
That's true. Thank you.
all right. Any other questions?
Carrie, there's a question here in the box. It says, how soon do you start the home process?
Immediately set up an
Yeah.
appointment with us today, and we'll start making it happen for you.
Yeah, like we said earlier, know your options. Even if you may not be ready or you don't think you are, so what? You still will at least know exactly where you stand and what you need to do to get there.
And that's why I just wanted to, in my business, I've always make room for appointments, right? Even appointments one-on-one to kind of explain what we're explaining today and look at your option. And I think about 2 months ago, we had a seminar on credit score. And I had 3 people that when we run their credit 548, 616. And I'm really proud to say this lady that had 548 is now 679 today in 2 months. Okay. All of that is, they make an appointment like, okay, Gary, here's my credit. And we looked at it and I said, this is what we need to do. You do this, you do that. And we got on the phone, we call in, we settle some debt. And they send me the updated score from Credit Karma that used to show 548 before, that's now 679. Like, wow, I love that. So yeah, and we are just a few steps away, which is one of the things I said at that seminar, that we are a few steps away from getting better, right? So I'm open to appointments all the time to help people to navigate through this thing. But the first thing is to stay in the dream world, right? We've got to visualize that these things are possible, and they are possible for you wherever you are. It's just, once your heart is open to it, then, universe, God, people will start coming to your aid to make it happen. And we are hoping we are one of those people that will come to your aid to make it happen for you. Now, I see if you owe the IRS but have a qualifying credit score, can you still apply for assistance program? That's a good question. Can you answer that?
I didn't hear that. Something about if you owe the IRS, what else, Gary?
So if you owe the IRS, so basically you have a payment plan with the IRS, right? Can you still apply for assistance program?
Yes. So the only thing that changes there is that we will apply that debt, the IRS payment, as part of an additional debt. And as long as you qualify, yeah, you're fine.
So to reiterate what you said, absolutely, yes, you can. It's just whatever your payment plan is part of, your debt, the DTI thing, your debt to income ratio is going to be part of that. So anybody else?
Patients
Okay,
have a question.
we have a lot of people that you have to put double tickets for, okay? Just make sure.
Yeah.
Wendy's got to keep track.
Yeah.
Yes. Patients have a question.
Okay. All right, Patience, what's the question?
Yeah, hello. Sorry, I signed in late. So the program about, is it NACA or DACA?
NACA,
Okay, can you like throw more light, maybe briefly on it? I didn't get that, please.
Okay. So it works very well for people that are in a high rental already. If you are renting a place right now and you're paying a lot more money on the rental, it's much easier for you to qualify for NACA. But if you are in a lower rental, then you have to show a savings of 6 months. Okay, so let me bring it down for you. You want to buy a house that 850,000. That's our average house now. $6,000 payment. And if you are renting $4,000 a month today, you have to have 6 months of bank statements where you save $2,000 every month for 6 months. And then you can qualify with putting $0 down to buy the house. Now, on the other hand, if you decide, okay, what most people are doing with NACA is buying income property. So your $4,000 can now allow you to go buy an income property that's maybe $1 million, $1.2 million. So even if it's $1.2 million, where your payment is going to be, I don't know, $9,000 or $10,000, so long as the other 3 units are renting to cover that difference from your current rent, you also will qualify. So that's the way NACA works. Okay.
So that one, it's only with income property that you can apply for, or it goes with single?
I gave you 2 scenarios. For your regular property, you just have to have 6 months of bank statement showing you've been saving that difference in payment for 6 months.
Okay.
You can't miss any month. If you miss any month, they're gonna tell you to start over 6 months again.
Okay.
Once again, that's where people go to NACA and they don't qualify. If you've had savings every month, if you've been consistent savings every month on that difference, you will qualify. Using the NACA program.
Okay.
Okay.
Okay. Thank you.
you. All
I
right.
have a question.
Okay.
What if you have a loan and you are paying for your loan? Are you qualified for buying a house?
Absolutely. That's what somebody just said. Just like when we talk about the IRS thing, it's the same thing. Your loan, whatever you're paying for that loan, is part of your debt. So your income to debt ratio. So they look at your gross income and they look at what your new mortgage is going to be, and then all the other debts that you have. So your current loan payment, your car note, your student loan, all of that, your credit card loan, your minimum payment on your credit card, those are all part of your debt. That's
Mm-hmm.
in against your income. So long as the income supersedes all of that, then yes, you can qualify to buy a home.
Like a 4-bedroom or something like that?
It depends on your income. So if you have, so let me just make sure I set the expectation right. Let's say you make $8,000 a month and you have a loan amount, your loan is about $1,000, right? And then you want to go buy a 4-bedroom, that's 800,000. That's not gonna work because at $8,000 income, the maximum you can spend is usually 50%, $4,000. And if you already have 1,000 in debt, that means you only have room for $3,000 to pay towards mortgage. That would not work for that kind of a purchase, right? But
Yeah.
if you have other income, let's say you have 8,000, your spouse got 6,000, your daughter got another 6,000, and you have even $2,000 in debt because you have $16,000 in income, you qualify for whatever the 850,000 house is going to be. So it's just depending. We can sit down together and see how we can make you to qualify, but your income's got to qualify you. Yes.
Okay. Okay, thank you for that.
Thank you, ma'am. Okay.
Great. This is my first time to joining you guys.
Oh, thank you. Thank you. We appreciate you, joining us. All right. Thank you, everybody. I think it was a great understanding of what the different programs are. And, again, in concluding, we just want to encourage everybody that it's possible. Either you envision buying the first house, the second house, the third house, whatever that may be, because this is how you increase your wealth. Like Fernando says, 75% of Americans, their wealth is in their home ownership. And to be a millionaire is just having a few homes that have equity of $1 million, and you're already a millionaire. So it's if we have that vision, then we can work towards it. Don't believe the lie. Remember in the beginning, I talk about don't believe the lie. Please don't believe the lie that something is not possible. It is possible. And it's just navigating the waters to make it happen. And please call us to set up appointments to talk about this. I'm going to give my number is 310-701-5332. Matter of fact, let me put it. Wendy, can you put my number in the chat box? Just say, Gary Nix, 310-701-5332. Everybody can call me back. And we can set up that one-on-one appointment to make sure we get you engaged. And yes, I love it, not just for first-time buyers, second, third-time buyers, like my brother that was talking about, okay, what would I turn, if I turn my house to income property so I can buy? We love that. We love that. We'll love to help you to push it, because that's when you start building more wealth, actually, But there are times when you have to sell your house in order for you to buy one. So